What's good, everybody? I just wanted to make this video to go over the analysis on EURCHF, the trade that we took earlier this morning in our Discord. I didn't want to put out the analysis just yet. I wanted the trade to develop a little bit, see how it was going to run. But I do want to at least make sure that you guys are understanding the reasoning behind this initial entry. The signal was posted in the free side of our Discord and also in the VIP side. So both of you, both spectrums will be able to benefit from this analysis. Obviously, the value and knowledge that you get from this breakdown could be taken into your own individual trading, and it'll help you progress and become your own individual and profitable trader. So obviously right now we are on the chart on EURCHF. Now I'm always going to start on a higher time frame. You're going to notice that that's our theme, where we're breaking down the entire market, understanding the true movement of where it intends on wanting to go. And you're only going to be able to do that based off of the higher time frames. We can't really get a strong idea and a strong analysis on the 1 minute, the 5 minutes. So breaking it down from the higher time frames, lower time frames, giving us more details is going to be your best approach. So obviously right now EURCHF on the daily time frame, and we can see that this is very much in a bearish cycle now. We can see from these highs to these lows, and it's not a confirmed trend line yet, because we do have to have 3 touches of the trend line for it to be valid, but we can see the start of that bearish move. Now if we zoom in a little bit, we can also see that this did give us an initial head and shoulders pattern, which is important for me because obviously that's what caused this selling pressure, as you guys can see right here. Let me go ahead and draw that out. So this went too far with that, but as you guys can see, that little candle right there, right? My illustrations are terrible, but you guys can actually see the initial candle that I'm looking at, that bearish engulfing candle that you can obviously see. So with that bearish engulfing candle, that's what we call an impulsive move. That impulse is obviously going to have some type of correction, right? So it's up to us to identify, well, if the market has given us a sell, its impulse much lower, it's probably going to have a corrective move, and we could probably buy from there. That's what you will call a counter trend trade. Obviously, a counter trend trade is going against the initial direction of the market, because right now we can see this is very bearish. But as we all know, when trading, there's always going to be different opportunities. And this is an opportunity that I do like to take, or when I find these opportunities, I love to place these type of trades. The reason being is because here being on the daily, when we scale down to the 4 hour, we're going to get a little bit more analysis. You can see that head and shoulders pattern a little bit better here as well. Let's go ahead and draw that out. So you can see that being the left shoulder, that being the head, and this being the right shoulder. Now I do have a standard when I'm looking at a head and shoulders pattern. I like to see that right shoulder reach right above, but we did not get that. What we ended up having was it just respected this level of previous structure, the neckline of the pattern. So when you have a head and shoulders pattern, you're always going to have some type of structure in your head and shoulders pattern that the market will retrace to and give you some type of idea, some more detail on what could potentially happen next. So since we actually respected that zone, you can see that massive drop off. But the thing about that massive drop off, that strong impulse, is there's going to be some type of corrective move. So all I'm trying to do is identify the buys back into at least this level of structure, that range. The retest of previous support rather will end up as a newfound level of resistance. And what's helping me understand why we should be having a counter trend trade, a buy in a seller's market, if you will, is not only just after that strong impulsive move, we came back to a level of structure that's important as well. I'll just draw that out for you guys to identify and see there. So we came back to this level of structure. Very important that we identified that. And we're still on the 4 hour time frame. The reason why that's important is because if we go ahead and replay this, right, this was in fact significant. We can see how important that structure was. We actually had an inverted head and shoulders pattern here. The break of that neckline forced this market much higher. Now, anytime I see a break of a level of structure, as you can see here, a strong break, that's confirming the direction, confirming that buyers are in fact taking over and sellers are no longer welcome. So that level of structure is important. Again, we're trading price action. We're identifying the most relevant level of price and the action that proceeds within it. So that is an action, that break above, that breakout. So that action is telling me, again, in the future, if the market comes back to that price, there could be some type of move. So I'm not going to play this out because that would take too long. We'll go ahead and skip that. So we did break above. And ever since then, we never reached that point. We never reached this price where it originally broke out to start that bullish move. That is an important price level. That's an important price we need to take note of. So not only do we have the market impulsing lower, we're going to take a tool that I personally love to use, which is called your Fibonacci extension. Your Fibonacci extension tool is going to give you exactly that. It's going to project and tell you where the market is going to expand to, where it's going to impulse to, and may find some trouble continuing from that point. It's another layer of support, if you will. So we can see that this level of structure is obviously important, but when we use our Fibonacci extension tool, we're layering now. We're adding more structure. You can see right here, I'll extend this out a little bit so everybody can see. We are at, or right about the 141 Fibonacci extension ratio. It's not perfect the way I want it, but you can see that that's also at that level of structure. Anytime you're trading, anytime you're looking to place an entry, anytime you want to be profitable, you want to identify your level of structure and the confluence, the actions that proceed within them, right? So that is another confluence. That is another level of support on top of a level of support, right? So kind of like layering. The analogy I like to use is it's like a martial artist, right? Where a martial artist, yeah, you chop one piece of wood, easy, got it. But when you now add 2, 3, 4 more pieces of wood, and maybe a cinder block on top of that, right? It's going to be much harder to break through. That's the same thing when we use confluence in trading. We're layering, we're stacking, we're adding the probabilities in our favor. So that way when we look to place a trade, it's obviously we want it to go in our way. So with the Fibonacci extension and also the level of structure, that's going to be our layer. That's going to be our structure, our important price where we can identify this as a buy zone. So this buy zone is important, right? Because now we're here. We can see that the market is extended lower. We can see that impulsive move. We can see somewhat the rejection. Not yet, but when we scale down to the 1 hour, we're getting a little bit more detail, right? I'm going to get rid of everything so that way it's clean. I'll just put a line here so no one's confused. This is our structure. This is our support that we're looking at on the higher time frame. Now, in order for me to identify some type of bullish movement, at least a corrective move, I need to see some type of candlestick reaction. I would like to see the behavior of the market at these points. And what I can see is the rejection, or at least the move from there. If this market wanted to continue to be bearish, it would have completely blown through there and there would be no corrective move. But we are starting to see buyers take over. Scale up to the 4 hour one more time. This wick to the downside on this candle right here is also important, right? That's showing me the start of rejection, that sellers are getting tired and buyers maybe coming into the market. When we scale back down to the 1 hour here, we're going to see that with this bullish engulfing candle. My illustrations are terrible, but you guys get the point. This bullish engulfing candle, at least of right now, is giving me the idea that, or the prerequisites, if you will, that buyers may be stepping into this market. So I'm looking at this as a potential buy at the current time. We have already entered this in our Discord. I'll actually go ahead and show you guys that right now. So this is our free signals in our Discord. Yesterday we did take a buy on GBP USD. If you haven't taken a look at that video, the link is in the Discord and also here in the YouTube page. We did take a loss on that, so I wanted to get a recovery trade, and I do think that EURCHF buys are going to be our best bet. If you guys can see right here as well, I have already placed that buy in our auto trader to make sure that anybody who cannot take the signal, who is not available at the time when the signal is placed, that I can place it for them, manage their accounts, and ensure that they're profitable on a daily basis. We're going to take losses as we did on GBP USD yesterday, but this is the time where consistency is what's going to help you become profitable. So right now, again, breaking this down, we had that head and shoulders pattern on a higher time frame. We had our extensive move to the downside. We are looking for our counter trend trade now, because after this impulsive move, what's always going to, I wouldn't say always because the market's not 100%, but what usually happens after an impulse, a correction, a retracement, a pullback, however you want to call it. And we're getting that, or hopefully we're getting that here. Reason being is because, again, if we look left to get right, we can see that right here, this level of structure is being respected at the current time. Again, because we had a break above that level of structure previously, that confirms that this price is important, that we should be looking at this, and we got to pay attention to the actions that happen around this area for potential profit. So again, scaling down to the 1, or back to the 4 hour rather, sorry. And again, using that Fibonacci extension tool, again, from swing high to swing low, back all the way up to swing high, we can see that we're getting that 141 Fibonacci extension respect alongside other confluences such as that structure. Right now we are in the trade. I wouldn't say it's early to be in the trade. I do like this this level of structure. I do like the way that this is mapping out. I would say maybe a little bit early in the sense of waiting for the candlesticks or the market to develop a little bit more. But anytime I've ever seen just a strong, dramatic move, such as we see here, and after we see a move like that, nobody's going to be selling at these lows, right? Nobody's looking at this and saying, well, I'm at a level of support, let me go ahead and sell. Anytime you're at these levels of structure, anytime you're at this price, anytime you're seeing something like this, you want to identify and realize that probably a lot of other people, other traders are seeing this as a buy zone as well. You want to go where the money is. So we're buying at a low point. We're never going to sell at a low point. So this being the structure that I do think is going to be the most relevant, obviously with some of the confluence that we have here as well. I'm not going to add, a lot of people always ask, why don't I add Fibonacci's such as this, such a giant move like that. Just not a fan of it, but you do have some confluence around that area. I'm not a huge fan of using fibs in such a giant move, but in this case, we're going to use that just because we can see how the more confluence we can add to this. So not only did we have the 141 extension on that trade, we also have the 618 Fibonacci retracement ratio, right? So we're having tons of confluence around this area, showing us that sellers are no longer welcome and buyers may be taking over in this market, at least monetarily, right? Doesn't necessarily mean it's going to be a reversal, but at least right back up to this level of previous structure here, which is just going to give us a retest of, let me get rid of that, which is going to give us a retest of what used to be support. It'll actually end up being now a level of resistance, and we're going to take our trade from there. And if we can reach this point, this will be considered a sell zone. So look out for that if there is a sell coming up on this for us in the near future. Obviously, as this trade develops, we can add more confluence if the market actually allows it. So I'm just going to add something like this. So let's say we this market develops, it starts moving a little bit more, we start getting further confluence. Let's say this market does buy, hits that structure, our trend line, we'll have a Fibonacci retracement there. Then we'll be able to identify our sell zone there as well. So we're getting a double up on this. We're able to identify the strong buys in the counter corrective move. And then as soon as our targets are hit, we have another trade setup, which will be our sell, continuing in the direction of the market and making sure that we're going with the flow of everything as well. So again, everything was posted here in our Discord, as you can see. And if you are wanting to be a part of the Discord, or the free Discord, being updated with everything as well, the link is in the description below. So feel free to join our Discord. Take advantage of our free daily signals. I'm posting one signal a day for everybody. I'm looking anywhere between a minimum of 50 to 100 pips per trade, even on the free side. So that way you guys can at least get 500 pips. If everything works out, 500 pips a week. If we do take losses, I may go ahead and send out a few more so that way you guys can recover from that and also put profits on top of that as well. But right now, this is the reasoning why we are taking our buys on EURCHF. I will make an update if on this trade, so that way everybody can see the direction, how this trade is working out for us as well. But hopefully that gives you guys some type of education, some type of knowledge, and really helps you guys become better traders, and also just understand the reasoning behind why we're in this trade and why I do think highly of this entry. So again, if you want to be updated with everything, please join the Discord. Make sure you stay updated with any and all content, with any and all trades, any and all live sessions as well, because I will be doing some live sessions with you all as well. So with that being said, thank you guys. Have an amazing day. Tell somebody you love them, and I'll see you guys on the next one. Thank you.